Everyone, like I said, my name is Jessica Chase. I am the ag agent for Brazoria County. Okay, adjusting the mic a little bit. All right, so like I said, I'm going to talk to you guys about crop insurance. So to start off with, though, disclaimer, I am not a crop insurance agent, but this is just information that I have. All right, so every year with farmers, we face the threat, especially in Brazoria County, of some sort of disaster. So like I said, we had Hurricane Beryl, we had Hurricane Harvey, we had the flood. When that happens, you lose crops, you can lose livestock, fences, all sorts of different things. So every year we face something like that. Agricultural production in Brazoria County, so our farms, we have over 2,500 farms just here in Brazoria County. 419,000 acres. Average is about 165 acres per farm. So with all that acreage, we need some sort of protection. So crop insurance is a great way to help protect your crops, your land, and your income. So it's a risk management strategy that farmers can use. It helps with the losses if a disaster happens. So this includes weather, fire, insects, plant disease, wildlife, and any sort of price decline. So if all of a sudden the bottom falls out of the market, this can help. So crop insurance is actually subsidized through the federal government. It's done through the Federal Crop Insurance Act. To promote the national welfare of improving economics of agriculture, basically to help us farmers out in case something happens. It's also ran by the Risk Management Agency under the USDA. They actually administer the program through a private sector. So it's kind of odd. It goes, the federal government has money for these subsidies to help us out. The risk management helps manage that, and they work with the private sector, so private insurance agencies. So this helps keep the price the same for everyone. So you know how you go get like a car insured and you can go to multiple agencies and they'll give you different prices? Cannot happen with crop insurance. It's like a set price because it's ran this way. So here's kind of the breakdown of it up top here. I think you said that doesn't work very well. Up top up there, you have the USDA and risk management. They're the ones, they have regulations and legislation they have to follow. This is where the price setting. Then you have approved insurance providers. So what that means is not anyone can just do crop insurance. So all the agencies or all the private insurance companies that are out there, not all of them can provide crop insurance. They actually have to be approved to do this because they have to go through and have the knowledge of how to give crop insurance and be able to provide that. So you have the insurance agents and the loss adjusters, and then we have the agriculture producers. All right, so there's lots of different definitions. I'm not going to go through and like every single one of these. It's recorded and you can give the presentation out. But basically, insured crop, that's what you are insuring. So whatever crop you have, I believe mostly here is vegetables, things like that. So that would be what you're going to insure is your actual crop. Catastrophic risk protection. This is the lowest level of coverage available. So it's like the bare minimum that you can get. It's only pays the current year's production is lower than 50% of the yield. Deductible, so it's like your car and everything, that's how much you have to pay to get the coverage, the amount. So, 100% minus 65, 35% would be your deductible. So if it was $100, they pay 65, you have to pay 35. Just like any other insurance, you can buy additional coverage. So I'm going to go through a few different ones here, and then there's basically supplemental coverage that you can buy. So you have your basic car insurance, then you can go higher if you want. Same thing with this. Endorsements, options, same thing. It's kind of like extras. The nice thing about these is the guarantee. This is the maximum amount of yield or revenue protected by the crop insurance agency. It's typically determined by multiplying the coverage level by the average yield or revenue earned in recent years. Basically, we're helping guarantee how much money you guys are going to get back if something happens. Indemnity, so that's the money that's paid to you. So it's going to be called indemnity, but basically that's the check that you get from the insurance agency if something happens. All right, so this is the process of how you would get insurance. So I said I'm not an insurance agent, so it will vary depending on what type of insurance you get, but the basics of it is still the same. Step one, you do need to either policy renewal, change options, or application. So if you're starting new, you need to find one of those registered agents, and I do have a link on here to find one in Texas. Like I said, there's only so many. I believe there's only 11 approved in Texas to do this insurance. So you contact your agent, you're going to talk to them, and then sales, acceptance, production, and then you have the insurance, and then basically you have your coverage and billing, and if claims, there's a process for that, and I'll go through these. And then if you have to report certain things, and then program changes. Is my hand in the... All right, so the risk management, this is the enrollment process for it. First, I said you have to find an agent. Like I said, they have to be registered. There's only about 11 of them in Texas. There is a locator. That's the website, but it's at the very end of this, too. I have all of the links for you guys. So then you have to gather records. So to be able to qualify for this insurance, you have to be able to provide these records to them. 3 to 5 years of Scheduled F tax records, and your production and your revenue reports. There is some other tax records and things they can work with you if you don't have that one, but you will have to provide records to them, and you'll work with the agent depending on what they need. Then you're going to submit the application, what type of coverage level that you want, all the forms, and then meet the sales closing date. So there is deadlines for all of these. It's a little bit different for each one, so you'll have to work with the agent on the deadlines because I don't have the exact ones for every single. Then you may need to maintain your coverage and report acreage, production, make sure you keep all those good records because if something happens, they're going to ask you for it, and then comply with the rules. So it's like good farming rules. All right, so if something happens, you need to notify your agent within, you can file within 72 hours, but no later than 15 days after the damage is done to the crop. And then refer to individual crop provisions for additional requirements. So let's say if you get supplemental, we'll talk about specialty crops. Some of those might have additional. I said these are the bare bones of it. Documentation, so when the damage happens, go out, take pictures, write down what happens. They need to know the location, the type of loss that it was. Keep all of those records. Now, then you'll send that all to the insurance agency when you contact them. They may send an inspector out to look at the damage. So they will gather the information. They'll ask if they'll ask you if they need more. They might send that person out to go look at the crop and see the damage that's there. If you choose to destroy the crop, so say something happens and you just go out and wipe out the rest of it, disc it all up, they're going to conduct an appraisal of the remaining value. So say like you had half of it and you destroy all of it, it's the value of it. So they're going to send someone out to look at all of that. I say indemnity, but that's the money that you're going to get. When they've covered everything, they've looked at it, they sent that appraisal out, they're like, okay, yes, you had this much damage, minus deductibles, fees, anything like that. All right, this is the check that you're going to get to cover your loss. All right, so plan of insurance. Basically how your protection, which is also called guarantee, is figured. So basically, it decides what is being protected on your farm. Your yield, which is how much you grow, and your revenue, the money that you're making. This will determine whether yields, revenue, or other criteria are used to make your guarantee. So other things that can be used is production history, revenue, the yield, revenue protection, your area plans, rainfall can affect all of our crops, And then the whole farm revenue protections. So I'll go through some of these. So like I said, key dates that there is. I don't have exact dates because they change and vary by the type of insurance. Acreage reporting date. So when you do have this insurance, you will have certain dates you have to follow. Most time it is this acreage reporting. Must report all the acreage of the crop. So if one year you plant 5 acres and the next year you plant 10, you have to report that to them. Cancellation date, the last day you can cancel a policy before it automatically renews. Change date, so contract change date, the last day you can make a change. So mostly it's just like any other insurance. And then end of insurance date, so the coverage ceases on that date. Anything that's after that is not covered by the policy. Your premium billing date, so when a farmer will be billed for it. Production reporting date, same thing. Report the amount of production of that crop. So you said 5 acres, the end of it, it produced how many tons. Sales closing date, the last day you can apply to purchase a new policy or make changes. Termination date, same thing. Does not pay, coverage ceases on this date. If the farmer does not pay any amount due, including the premium, it will cease right there. So this is basics of just like any other insurance. If you don't pay your car insurance, you're not going to be covered. If you get in an accident the next day, you don't get anything for it. Same type of idea. Planting date. So there is dates they have with this. The earliest planting date, planting before this date makes the planted crop ineligible. So you are not going to get money for that crop if something happens if you plant before that date. Those dates vary by the crop. So this is where you're going to talk to the agent. And if you're planting lettuce, it's going to be, a different date than if you're planting corn or cotton. Final planting date, same thing. If you plant after that date, it's not covered. So basically, there's a range of days that you can plant everything. And then end of late planting period, if a crop is planted after this date, it's no longer eligible. All right, so this is one of the insurances you can get, and there's benefits to it. I think that's one of the handouts that was passed out. It's called Beginning Farm and Ranchers Benefits for Crop Insurance. To be eligible, you must not have actively operated and managed a farm or ranch anywhere with an insurable interest in any crop or livestock for more than 10 years. So what that means, basically, if you've been farming for 10 years or multiple years here, you may not be eligible for this. But if you just started farming, you'll be eligible for this within 10 years. The interest of it is, when it says that, is basically you have a company or multiple people, or you have some sort of investment in that counts. If you're not actively doing the farming, but you're part of it with the, I think like co-ops, I believe you guys have. If you've been doing it for more than 10 years, you're not going to be qualified for it either. The application is with that same insurance agent that is registered. You're required to identify any previous farming or ranching experience and any inclusionary time. So basically, if you're under 18 and you're farming, that doesn't count. If you were like in college and farming, that doesn't count. Or active duty military. So those are the ones that even if you're farming and you were military, they're not going to count those years. So the benefits of this is you get 10 percentage points of premium subsidy for each additional coverage. Basically, that means you get extra on it. So if your subsidy is 20%, you might get 30% on it. So you get a little bit extra back. Increase the substitute yield adjustment. So that means that the price adjustment on crops, they can adjust it up a little bit higher for if you qualify for this. You get to use a previous producer's production history. So say you bought land or inherited it, something, you just started farming, and they had it for years. If they'll give you that information, you can use that to show the history of the land, because they'll use some of that marketing or some of that production and that revenue to help determine what your coverage will be and the revenue that you could potentially be covered for and the money you would get back in a loss. And then you wouldn't have to pay the administrative fees that is there. So you qualify that if you didn't farm for 10 years. It expires once you hit that 10 years. So if you had if you've been farming for 10 years and you were under this, it expires after that. You no longer qualify because you're not a beginner anymore. Or if you cancel it. All right, veteran farm and rancher benefits for crop insurance. It's the same thing as the beginner one, but this is for veterans. This is for 5 years, though. Must not have actively managed a farm within 5 years. And then you also have to be a veteran. Same thing, the application, you have to identify any farming that you had. And same if you're under 18 or in college, that doesn't count. And you do have to provide your date of discharge or release from the military to them. If you're in the military and farming, it doesn't count. It's like the beginner farm one. It's the same benefits as the beginner farm. So you get that extra subsidy, that extra money, the substitute yield, you can use the previous production history, and then you don't have to pay the fees. The expiration on that is the 5 years. Once you farm for 5 years under it, you no longer qualify, or if you cancel it. All right, these two that I'm going to go over, I think is going to be the ones that are going to be mostly relative to this group. Whole farm revenue protection and micro farming. These are two of the most comprehensive risk management plans. So these are the two that cover the most for your farming. Your guaranteed revenue, using tax records to document how much you have earned from farming in the recent years. So like I said, the guaranteed revenue means how much you're going to get. Benefit of using revenue is that you can insure almost any crop or animal produced on your farm. These do not include buildings, tractors, anything, fence lines, anything along those lines. That's a different insurance policy. This is well suited for those specialty crops, the organic, urban, and direct-to-market producers. All right, so whole farm revenue protection. It's a safety net for all the commodities on your farm. So that way you can insure, if you've got 5 different crops, you can insure all of them. It's actually good to have multiple types of crops for these. It will only insure a farm up to 17 million. So basically, if you make more than 17 million, it will only insure up to that. So the most that you can get back, basically. They're not gonna give you 20 million. Includes the farms with the specialty crops. You can do livestock under it. And also covers, like I said, the farm, the animals, byproducts of them. That's the nice thing about this one. It covers the byproducts. So that's the jams, the jellies. I believe with like bees, if you do anything with the wax. And then this one is commodities purchased for resale. So if you do buy something and resell it on your farm, it covers that also. And planting costs. So if you had a catastrophe, you lost all of your vegetables, it will help pay to replant all of those. It does exclude timber, forest products, so any sort of tree stuff, animals for sports, so if you have any sort of horses that you're doing rodeos or anything like that, any sort of show stuff, and your companion animals too. So if you have anything like that, this does not cover it. So the expected values is primarily based on third-party sources on it. So they look at the market value of everything. And expected yields are based on underlying policies or insured's 4 to 10 year average. So that's where the record keeping, if you keep records and have showed that you produced 10 tons for the 5 acres last year. And then 12 the year before that, 15, 5. They average all of that, and that's how they're going to get your expected yield for the future so that they can plan on how much you need to be insured for and the coverage you would get. So as it covers up to 17 million in revenue. The coverage is limited for $2 million for animals and animal byproducts and aquaculture. And then it's limited to $2 million in expected revenue from greenhouse and nurseries also. Okay, and it doesn't include items such as produce grown in hoop houses. I believe that some of you, that there is some that you guys have on there. So this doesn't include items from that, but there is other insurance policies you can buy for that. So the coverage level, this looks counterintuitive because 17 million is not on that graph. But basically it means that if you make more than 17 million, they'll only cover up to that. So 85% of 20 million is 17. So that's the coverage you can get. So if you make 20 million, they'll only do 85% coverage, meaning you'll get the 17 back. The more you make, the less coverage that you get. Basically, they'll only give you up to 17 million on it. So if you make 34 million, you can only do the 50% coverage. All right, information required. 5 years of tax forms on this one. So if there is exceptions for the veterans, the beginning farmers, or if you're qualifying to not file a U.S. tax return. So there is exceptions, but you'll still have to provide some sort of records. Information about what will be produced on the farm during that production time, so during that policy. Total revenue and acreage for the last 3 to 5 years. This is used to complete the intended farm operation report that you'll have to do with the insurance agent. And they will walk you through all of this. And then some other information like supporting records if requested. So if you're organic, you're going to have to provide your organic certification. Might need to provide inventory. So basically, you need to keep really good records of everything. All right, microfarm program. This is same for all the commodities on your farm, but it only does up to $350,000 in approved revenue. So this is for those specialty and organic commodities, local, regional, farm identity preserves. So those smaller farms, probably doing a lot of the vegetables and everything, selling maybe the jams and jellies. This would be a really good one. So what is a microfarm? It's streamlined, so this is basically a more accessible version of the whole farm protection that I talked about a moment ago, so a little bit easier. It ensures farm operations with approved revenue, I said up to $350,000. So you don't get the $17 million from the other one, you only get up to $350,000 on this one. Post-production and value-added costs may be included. So that was the jams, the jellies, pies, let's say anything after you harvest that you make from it. Those can be included to be insured. Expected value is based on the insured's past 3 to 5 years of average revenue and acres. So same thing, you have to have that record keeping. You have to show that you provided, if you had 5 acres, how much did you grow on those 5 acres between the last 3 and 5 years? And then how much revenue did you make from it? So if you sold the whole crop to a, so like cotton, and you took it to the cotton gin, how much was it? How many tons did you produce? How much did you get from them? If you make the jams and jellies off of a product, so you harvested all of your tomatoes and onions and jalapenos, whatever, and you made salsa. So you didn't sell the tomatoes, you then used them and made salsa. How much revenue from that salsa did you make? So how much money you're making. Same thing, you have to provide 3 years of tax forms. Unless you have a exclusion to file. So if you did not have to file taxes, then you don't have to provide them, but they'll ask for other information. So other information, I said total revenue and acreage. So you got to tell them how much you have and how much money you made for up to 3 to 5 years. And other supporting. So I said if organic, you're going to need to provide your organic certification. So same thing, it covers revenue from all the commodities produced, so everything that you produce on your farm, the animals, the byproducts from them, and then purchased for resale. This does not cover replanting costs, though. The whole farm protection gave you money if you needed to replant. This one will not give you money if you need to replant something. And same thing, it excludes the timber, the forest, pets. So there's less paperwork requirements for this one. You know, 3 tax years instead of 5. Only up to $350,000, so it is less coverage. Same though, if you're not making $17 million, this would be a good, you know, if you're making less than $1 million, this is a really good one. Post-production and value-added costs, maybe include those jams, those jellies, those salsas. And then, like I said, the 3 to 5 years. So make sure, same thing over and over, keep records. All right, specialty crops. This is one I think is most people in this room have probably one on these lists right here. So the risk management offers crop insurance for specialty crops under individual crop policies. So that means that you can get that overall insurance, whether it's the whole farm or the general risk management one. You're going to buy a whole policy, then you can add to it with the specialty crop one. The only ones that are covered are on this list right here. Almonds, apples, apple trees, apricots, avocados, bananas, beans, let's see, cabbage, cherries, chili peppers, trying to find things that we grow mostly around here. I don't think we have coffee or coffee trees. Cranberries, cucumbers, the figs. Hemp is covered also under this. Let's see, lemon trees, onions, nursery. So that does include nursery, field grown, and container. So this is where before on that whole farm, it doesn't cover the nursery products or those the greenhouses, the hoop houses. Specialty crops would. You'll have to buy this insurance to cover those. Peaches, pears, pecans, pecan trees, peppers. Let's see, potatoes, pumpkins, strawberries, sweet corn, sweet potatoes, and tomatoes. So there's more on there, but that's kind of, I think, what we mostly grow around here. So if you have any of these, you can buy this specialty crop. The resources for all of this, because each plan is a little bit different, there'll be different fact sheets on. So these are the resources for them. So the risk management, you could take a picture of this. You could print this one page out for everyone. There are more out there. Said David gave that really great book to you guys. That is fabulous to work through. You could sit down with the agent and work through it with them. To find an agent is find an RMA agent. So one, as I said, there's only like 11 in Texas. You have to work through one of them to get any of this insurance. To find them, you got to go to this website and do the agent locator on it. The microfarm, the information, I printed it out for you guys, but the information also, if you want to go to the website, is right there. General about crop insurance. FSA loans and financial assistance. So this is something different, but I put this in that if you need more financial assistance for building things, buying certain things like that, FSA provides that. There is grants and loans, different things. You have to qualify for them. There is a local office here, so it is in Angleton. It is over on Velasco by the past the courthouse. Julie Stoddard is our FSA agent here. And Chris Morgan is the NRCS, so he's the natural resources agent for both of them work under USDA. So there is a local place that you can go in and talk to these guys. And then I think all of you guys, but if you're going to start a farm, there is some information on how to start a farm and get the insurance. Okay, so that is it was really quick. I know because there's a lot of information out there, but it's very particular to the insurance you get. So I'm unable to cover some of that because you have to talk to the insurance agent, but this gives you an idea of the different types of insurance that is out there. Well, so I said, these insurances do not cover your buildings, your tractors, anything along those lines. You can get that through private. So Farm Bureau can give you that type of insurance policy also, and you can get that in addition to these crop insurance ones. This doesn't include pasture. There is insurance like this for your pasture or hay, if you're baling any of that. There is one for rainfall also. So there is a lot of different ones out there. You don't need all of them. This is where you sit down and talk to that agent, and they'll help you figure out which ones you guys need. So rainfall, that one could be more for like our sorghum, our corn, our cotton, crops that are very, very dependent upon rain, because we don't irrigate them. If you're irrigating, then you aren't really going to need that rainfall one. Livestock, so some of these was covered under livestock. It added a little bit, but there is other livestock policies that you can get to cover them. But they cover more of like disaster. So the biggest one we usually have is like a lightning strike. If cattle are standing around a tree and lightning hits, sometimes it can unalive the cattle. That can be covered under a policy. I'm trying to think of some more on this one. So that's kind of the basics of that. I want to open more for the questions.